Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592, the website at allamericangold.com. And, man, January cannot end fast enough. What a wild, wild ride it's been. Well, it really, when you think about it, all that's happening is the air's being let out of the bubble. But yesterday, the Dow at its height was down almost 1,100 points. The plunge protection team steps in later in the afternoon. The Dow actually finished up 100 points, and then this morning it's now down 400 points. And again, listen, they can put all the lipstick and all the makeup on it. A pig is still a pig, and right now it's really simple. It's not even complicated. Are we going to be headed to a recession, or are they going to pull off, call it the miracle of we're going to raise rates just a little bit, and somehow that's going to stop inflation and save the markets? I'll let you do the math. Jason and I, we do this for a living. We day in, day out. Never, ever, ever, ever have we seen the amount of money printed that we saw in the last couple of years. It's unprecedented. You can't hide it. The inflation is, and of course we've said it all along. Listen, we're still not at the peak. It's still getting worse, and a couple of rate hikes isn't going to stop it. But this is why gold is rallying. Gold at new highs for the year this morning, bumping up here now on $1,850 to the ounce. And believe me, that's going to be by the end of this year. You're going to be wishing, I wish I had bought at the beginning of the year, because Jason, I don't know that this can be pulled off without this being some. It's going to end in tragedy.
I think 2021, Joe, was an opportunity to buy gold up to now, the early part of 2022. And you talked about how crazy the ride is for the stock market. But what I really like is how nice and quietly gold is just kind of creeping up, just taking a nice quiet ride up while everybody's freaking out about the markets, right?
Well, let me tell you, right, the whole Bitcoin is gold thing, maybe that conversation's coming to an end as well. Massive inflows into the ETF. So this is Wall Streeters pouring into gold. Matter of fact, the biggest one-day increase ever since the creation of the ETF. Jason, we're talking like almost 30 metric tons in a single day.
Wow. Yeah.
30 metric tons. Now, why do you think that is? Because they already know. Listen, they already know. The bond market that backs up all of these loans is going to come under duress. Now, did it happen yesterday? No. But believe me, this is exactly why they're pouring back into gold, because as soon as some of these defaults and things start happening, it's going to be a tidal wave, and it's going to, we need a major reset. So many things to talk about. We got to talk about the Fed finally released its digital currency paper. We're going to talk about that. This is nothing more, believe me. This is exactly, and these guys are masters at it. Oh, no, we're not doing anything. Well, we don't know. And, well, maybe we're going to look into it, but don't worry. And then, of course, now all of a sudden, the big paper out, Jason, this thing is coming, and it's going to come quick, because it has to come quick, because I don't think we get to the next presidential election without massive turmoil happening out there, and this is just going to be part of it. But before we get to that, layoff announcements. I've been watching these, and I've been worried about it because I'm like, you know what? It's just like the stock market here, right? So Jason and I have been telling you, hey, the underneath the stock market, it had started crashing last year. You didn't see it, right? Well, the Dow was hitting all-time highs. It was crashing underneath. I feel like the economy's the same way. Hey, the real big guys, they're fine. Right now, some of them are missing earnings, right? And we yesterday of the people releasing guidance, and not all companies release guidance. 5 out of 6 companies on average now are lowering guidance, lower, right? So again, this is going to put pressure on the stock market. But we saw Peloton was probably the first with layoff announcements yesterday. They got joined Beyond Meat, the fake meat company. I will tell you, I actually understand that because there's been a few times if you walk into a store at the wrong time, these meat departments get wiped out here every once in a while. The only thing left in these wiped out meat departments is the Beyond Meat stuff. They've come out and said that they are starting to, they're calling it reorganization or make organizational changes. It's just code for layoffs have started. Then Unilever, another one of those big like P&G. Unilever announcing they're laying off 1,500 people. So, again, something we haven't heard about in several years starting to make an appearance here. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Gold's up 6 and change right now. 1848. Silver just coming back from unchanged now, rallying back again here, closing back in on that $24 mark. The Dow's now down 500 points. The Nasdaq's down 400 points. Of course, yesterday was down over 1,000, rallied all the way back after the plunge protection team stepped in, going right back down today. You can't change the data, right? You can't change what these companies are saying. We're starting to see some layoffs here. And again, I think this is really setting up. This isn't the 70s. 70s, we had inflation. We didn't have the huge money printing. We had turmoil in the presidency, followed by a weak president, right? Nixon, Ford, got Carter. Let's call Trump what it was, right? Turmoil in the presidency, weak president, Joe Biden. Arthur Burns, a very weak central banker. Matter of fact, when you talk about central bankers, no one even remembers this guy's name. We've got Jay Powell. Again, another extremely weak central banker. The big difference between the two, the biggest difference, is the only tool the central bank has ever had has been debt. I don't care what they call it, that's the tool. And they went to epic proportions. The amount of money created dwarfs anything the world has ever seen. And again, this is the storm. This should be easy to predict. And that's why, when you look at the guys I tell you to follow, that's why they're all telling you, hey, we got problems coming, recession watch, all these things. And then right on top of it, the Fed released their paper, if you will, on their central bank digital currency paper. And really had some really interesting things. Now, they didn't come out and say we're doing it or not doing it, but they wanted a lot of comments back, not from you and I. No, from their banker friends. And already, within 24 hours, Bank of America is the first to say, oh, yeah, this is going to be a great thing. Let me tell you some of the things that are in it. And Jason, I don't think you're going to be surprised by this at all. One, it's going to set up the Fed to muscle out banks from the demand deposit business. And this is a big one. Because this is why I tell you, don't keep that money in the bank right here. And this is bullet point number 1. There's going to be another huge banking crisis. That's why I said, listen, if you don't want to put your money into gold and silver, call Joey, call my son, give it to him. It's going to be safer, believe it. Even though the stock market's going to have a horrible few years, it's going to be safer there than in these banks. And essentially, Jason, the Federal Reserve will now be in charge of everyone's deposits.
Yeah, couple that with the IRS's demands that if you have a $600 an account with $600 or more, they want you to the banks to turn in all that information, Joe. And so when you go to your digital money system, every single deposit you put in there, I was talking to my wife this morning about this. They want you to have a memo, excuse me, as to what this money is that's going in. That means that they'll just tax you based off all your deposits coming in, unless it's a deposit that it's not taxable.
Yeah,
crazy stuff.
You got it was birthday money, right? Okay, well, hey, you got some birthday money.
That's income.
You got to put that into the tax column, right? Or it's paycheck. It's this. It's that. Here's the big thing too out of this. We're not going to have this. So they've already been eliminating banks at a pace never before seen. We have less than 5,000 banks in the entire country. And something else that's happening at the same time in 2021, and this is actually 2022, they're saying it's going to be even worse. U.S. banks closed a record number of branches, right? They're getting rid of locations because they already know, right? Hey, it's coming, right? The 5,000 banks is going to be, and I don't know what we'll end up with. I'm going to say 100. And they're not going to be banks the way we view banks anymore, right? They're going to operate more like glorified lenders, right? Hey, we're going to do home loans and credit cards and auto loans, right? And that type of thing, and maybe operate more. Some of them may operate more like a hedge fund. But these branches, they closed almost 3,000 branches. And actually they closed over 4,000 branches, but they did open 1,000 new ones, in places, where, hey, there was nothing there and all of a sudden they build 10,000 homes. They're going to build a few branches. But, the overall trend, Jason, is they're going to be closing locations because at the end of the day, when this thing is all said and done, the amount of actual, banks as we know them that exist are going to be few and far between.
Yeah, add to that, Joe, that there'll be e-banking, people doing their banking on the internet, and so that'll just be less and less branches needed. And
yeah, and that's the cover. Well, they don't have to come in like they used to. Listen, the Fed's taking over, and that's what a digital currency is going to be all about. And they'll say, and again, I can tell you already, because when the next crisis hits, well, if we have the digital currency, we don't have to wait for Congress, and it doesn't take. So when Congress says, hey, we're going to give everybody a $2,000 check, from the time the president signs it to the time the first person starts getting those checks, it's 4 to 6 weeks later. Well, they'll say, but hey, with the digital currency, it'll be tomorrow. Right? And everybody will get it tomorrow. That's going to be their, because they love to take away freedoms by giving you convenience. Bullet point number 2. The Fed could buy all the assets which the banks now finance with demand deposits. So again, this is the Fed essentially taking over the bond market, Jason.
Yeah, no, exactly, Joe. And you can look at Japan as kind of a model because they don't have the world reserve currency, but their central bank owns a massive amount of their stock market. Isn't that kind of where we're headed right now?
Yeah, very similar. And I think that's going to be next, right? Already the Fed's the largest holder of treasuries, the largest holder of mortgages, and why not? Behind the scenes, they've been, maybe they're not officially outright buying the stock market, but they are definitely supporting Money and payment services will become more socialized, right? Obviously, the power in the hands of the few. The government could declare paper as no longer legal tender, thus forcing the digital currency. And that one stuck out at me. That's actually, so when you think about in this paper that they put out, the ability after they set this up to ban cash. They've been wanting to ban cash for decades now, and Jason, this is just going to help them do it.
And here's what I think they're going to do, Joe, when they ban it. I think they're going to ban it for commerce. I think there's going to be some stipulation for a use for cash for, let's just say, international deals or something. They got to have a private way to be corrupt, very, out of the view of the public. So I believe it'll be just partially illegal.
Yeah, I think that, it's good. I'm glad you brought that up, because I actually agree with that sort of. I think there's going to be a timeline. To Jason's point, it's not going to be illegal right away, and they'll slowly ban it, right, for certain things. I think immediately, probably on day one, no one can spend more than $10,000 in cash, period. So it actually could become illegal to have more than $10,000 in cash on you. Think about the illegal search and seizures that are already happening. But to Jason's point, I think there's going to be a timeline. There may even be an incentive, especially early on. Hey, put all your cash in the bank. Yep, you're going to have to tell us where you got it all. Don't get us wrong here. But, if you had, maybe you had $10,000 in the safe. Maybe you had some emergency money. But, hey, if you put it in, we're going to give you a 10% bonus in electronic credits. Kind of bribe you into it. And then I think there'll be a drop-dead date. And it may be 3 years, 5 years, 10 years, whatever plan they come on. But eventually, cash will be outlawed. That's what I think.
Yeah, no, I agree with everything you said. What I'm saying is when the United States government wants to back one Middle Eastern country against another one, that cash is going to be legal. They're going, when they dumped that how many billions of dollars in Iraq that one time, remember that?
Yeah, that's true. I mean, how do you dump pallets of cash?
You got to be able to do. You got to be able to do that, Joe, because these Middle Eastern countries, they're not going to do digital currencies. And if you want to back up some group against another,
you know what? Jason does bring up a great point. The dollars could be legal in foreign countries and not legal here.
Let me make an assertion, Joe. The gold was made illegal in 1933 for the public to use here, but it was still used in international dealings until 1971. It's sort of the same thing.
Yeah, very much so. That's another great point. I didn't even think about that. Obviously, we know the tracking, right? The government's going to be able to track everybody and know what they're buying. And again, it doesn't necessarily matter until it matters, right? And this is the problem with that. And all of you out there now, when you withdraw large amounts of cash and the bank asks you if you're under duress, or they want to know, hey, what do you need it for? I want you to know they're not necessarily being nosy. I mean, they could be, but really, actually, they're required to by, part of the Dodd-Frank legislation, by the way. Yeah, too big to fail. Will you taking out cash have to do with too big to fail? Well, a lot. They need that money in the bank. You have no idea. And all it's doing is they're sending a notification. Hey, Schmuckatelli was in here, just took out $8,000 worth of cash. Here's the report to the IRS. It doesn't go anywhere until you get audited, right? I mean, and then all of a sudden, all of those things matter. But of course, we know how powerful this is, right? You want to ban AR-15s. You just take them out of the system, right? You get rid of cash. Hey, you're no longer allowed to sell AR-15s, right? And then you're basically going to create black markets, try to force people to be criminals and all these other things that want their freedom. Spending data could be used in a social credit score system. Listen, how far away are we from that? Right? I mean, Jason, I kind of feel like we're really on our way to this type of system, with the banning of social media and all this other stuff already.
Yeah, we're very close to it. The cameras. We don't have the camera system that China put into place very rapidly. They have billions of cameras. They got to be able to watch you and know where you're at. But let's face it, our credit score is a building block to a social credit score. So they're already valuing our spending habits and saying, "Good boy, you've done very well in our system. You get an 800 score, and you're outspending and you don't understand your money situation, so you get like a low score of 500." So that's already there, Joe. So all it takes is they have to have video of where's the shopping centers you go to, and are you jaywalking and not going to the corner, and did you throw your bubble gum on the ground and litter, and once they can identify people's behavior, then the social credit score is coming, Joe. They just gotta have more cameras is all, right?
Yeah, that's all. No big deal. By the way, we're reviewing the central bank's 35-page release on the coming digital currency. Patriot Radio News Hour. We'll be back after the break. Welcome back. I know what you're thinking, right? The scariest hour in radio, and Joe doesn't know everything, and he's just trying to scare us. And I want you all to know, first of all, I identify as extremely handsome and very intelligent. So I just want everybody to know that when you use the pronouns to describe me, those are the ones that I identify as. But if you don't want to believe me, how about Bank of America? Maybe you want to believe them. Let me tell you what they said as part of the reason why they love this idea. A central bank digital currency, a United States central bank digital currency, would differ from the digital money currently available to the public, because it would be a liability of the U.S. Federal Reserve, not a liability of a commercial bank, and so would not have no credit or liquidity risk. See, this is the problem with having your money. B of A, in supporting of the digital currency, just told you the reasons why you really don't want to have your money in the bank with them. Because you're subject to liability and credit risk and obviously liquidity risk by having it in the bank. Because with the banking industry, they take your deposits, and what do they do with them? They loan it out. And if those loans go bad, the bank goes under. I mean, that's a simple, very simplistic way of looking at it. But it's very, very important. B of A also thinks that would allow the United States to still maintain its reserve currency status at least for a little while longer. Two very important things, right? Number one, B of A is already telling you, hey, listen, get ready. There's going to be another liquidity problem here, right? And it's going to be based on defaulting debt. And if it's at the Federal Reserve, they own a printing press, right? And they normally don't make loans. So therefore, you're not subject to that. Now, one of the interesting things in the paper was talking about ways that the central bank could really affect things and reset things. One of the interesting things in there was that obviously the Fed now could lend to businesses and individuals that they like, right? Picking winner. Think about the control here. Hey, as an example, you know what? you're a payday lender, you're a pawn shop. We don't like you guys that much, so we're not, you don't get a bailout round, or we're not making finances available. Oh, wait a minute, Joe, you run a radio station that we don't like, and you say things that, we don't like. We're not lending you anything. Oh, wait a minute, hey, Schmuckatelli. Oh, well, it says here that you got a couple AR-15s, so you know what? Nope, we're not loaning you any money. And again, I say AR-15, it could be, hey, you got a handgun, right? I mean, at the end of the day, it's a lot of power. It's a lot of power. But here was the thing that really, of all the things that caught my attention, they would, and this is what they think is going to happen, driving bank rates negative. See, they don't want to have negative rates right now with the retail banks, right? Because that would really be a problem for them. But now they could make the rate negative. And think about inflation as it's eating up your money. Now they could have, to Jason's point, hey, you've got digital credits here. Well, there's a negative rate to you holding these digital credits. So if you don't want to spend all your credits this month, well, guess what? Unlike today, a lot of people, we talk about inflation, right, Jason? And people are like, well, I got $150,000 in the bank, and every month it still says $150,000, and they don't, in their mind, they're like, well, you know what? If it said $140,000, I'd be upset. But this is exactly what they're saying now.
Right.
That with the digital money, they can make that negative and make that, hey, we're going to make that $150,000 in credits go to $140,000 in credits unless you do something with it.
That's right, Joe. With the negative interest rates, people would go to the bank and pull their cash out, and if you have no cash to pull out, then you're stuck with their system. If you look at the European Central Bank, Joe, and this is an interesting fact that you can look up, they're having a lot of trouble. Their central bank is in much worse trouble than we are. In fact, the dollar could get stronger with this next market crash because the euro and the European countries in the euro are in much worse shape. But, Joe, they dropped into negative rates. And it's interesting when they were down negative 0.1, negative 0.2. They just slowly inched it down. The day that they knocked it down to negative 0.5 was the same day that in 2019 in September that the repo markets went crazy. It was the same exact day. They were pushing to see how far they could go with cash in the system. I think they were testing it out, Joe, and now look, he's like, well, okay, this is what we can do with cash in the system. Now, how do we get the cash out of the system so we can go down to negative 0.5 very quickly?
I'm going to tell you right now, what Jason's talking about, I know for a lot of people, you're like, I don't really understand what he's talking about. You don't have to. Okay, you don't have to. Understand this. They realized they could only go so negative. To what Jason's point was. After a while, you get too negative, there's big problems for the banks, and you can't go any more negative than that. But the problem is, they really need to go more negative than that, and that's the problem. So bringing this digital currency alleviates that issue. So if you want a loan, the Fed can say, well, hey, interest rates are at 7%, 10-year note 7%. Right, so the lending facilities, formerly known as banks, they're in good shape. The problem is your digital money account. Well, your digital money account, we've got a rate of -1 or -2 or -3, whatever negative, and whatever they start with, just know the number's always going to get worse, right, as time goes on. And this allows them to try to have their cake and eat it too.
It also forces people with bank accounts to want to empty those bank accounts out, Joe. Because why would I want
Put
money
it in the stock market.
Yep.
Put it in the stock market. If you don't want to get these negative credits, you better invest it.
Because remember,
right? Put it over here. Put it over there.
Your bank account will lose money in a negative interest rate. You actually will see your money leaving your account with a negative interest rate, Joe.
It's absolutely brilliant. These guys are brilliant. I never even thought about it that way. Patriot Radio News Hour. We'll be back after the break. 800-951-0592, Patriot Radio News Hour, Joe Jaquint, Jason Walker. Listen, gold's up again here, 1847, 1848, almost 1849. Silver just went positive again, heading back above $24 to the ounce. The Dow's down 500 points. The start of the Fed meeting today. Tomorrow will be the press conference, and not expecting a lot of fireworks here. The ending of QE, an interest rate. I think Jay Powell is going to be on the dovish side of it, and not saying, hey, I think he's going to stick to, hey, we're anticipating 3 rate hikes. I think that's going to be, because that'll make Wall Street happy. I think that's gold's broken out here. I think gold's going to be rallying and rallying significantly as a lot of people are going to say, yep, Jay Powell doesn't have the stones to actually fight inflation. But gold's up about $12 from where we were yesterday. And yesterday we were running the $20 Liberties and the $20 Saints at $2,100, so you were saving $25. I did this last week. I'm going to do it again. I'm going to allow you to buy while ignoring the price increase. So we're running it back here. $20 Liberties, $20 St. Gaudens. These are the pre-1933, the most private way to own gold, right? You can buy it, sell it, trade it. You don't have to give out your Social Security number. There's no 1099s. There's no flags, right? There's no bank, whatever, notify the IRS and all those things. They're $2,100 today at 800-951-0592, and we are talking on, I guess it was either this weekend, Monday morning, the central bank finally released its, I'll call it its white paper, if you will. It's actually a little more than a white paper on the central bank digital currency, and wanting the financial institutions to start responding to it. And this is a very big change, right? Because so far, Jason, right now, they've kind of downplayed it. They denied it, said they weren't going to do it. Don't worry. And now, all of a sudden, based on what they put out there, this almost looks like a certainty now.
Yeah, I mean, they have to make a choice and do something. And so you can't reverse what you're going to do too quickly, because then it just shows that you're not very certain as to what you're doing. So they made a choice, Joe. They're gonna go with it.
The biggest thing I took out of the paper was the ability for them to have 2 different sets of terms. Things that the banks will like Bank of America's. Now think about, why would the banks go along with it if they were no longer going to be getting deposits and this and that? The answer is simple. The Fed is going to set a negative rate on your digital credits. In other words, if you just leave today, you leave $150,000 in the bank, every month it still says $150,000. That won't be the case with the digital credit. They're going to take a little bit of that, right? Hey, 5 years from now, that $150,000 in digital credits may only be $120,000, maybe $100,000. It could be $145,000. It's not going to be $150,000.
How often do you think they'll be pulling it, Joe? Daily, weekly, monthly? How often do you think they'll be pulling it?
That's a great question. I think it'll be a monthly, and again, and I'm just thinking they'll just call it a fee, right? Whatever you'd like to call it, right? They'll have some a word that doesn't be, hey, we're just devaluing your money, right? It won't be as obvious. But there's going to be a negative rate to that, and it's going to allow the big banks to stay in business. And, hey, why don't you call Bank of America? You know what? They can take some of that money, and they'll loan it out to people, and you can earn some interest that way. And I think this is very important for everybody to understand. These guys are absolutely brilliant. now it makes total sense now, doesn't it? Hey, they don't like it when your buddies. The Fed hates money in the bank. They hate it. They want it to be spent. Period. Why? Oh well, look at it. It's growth, right? And of course, when you have inflation like this, is you have to have huge growth. They want everybody to spend that money, and if you don't spend it, they want you to put it into the debt markets. That's what they want. And this is a way for them to get it, Jason. This is a whole different angle. I've always talked about, hey, it's a tracking device, and it's this and it's that, and they could, we're not loaning to you, or you've got to do X to get access to your money, right? We could shut your card off and do all this stuff. This little chestnut here. That's a game changer.
Joe,
and I'm like, man, why didn't I think of that? They always make me feel stupid when they finally reveal what the real plans are.
Joe, I talked a bunch about negative interest rates before coronavirus came blowing through. And I figured the next market crash, that one of their fixes will be a negative interest rate, and then paper, no paper currency. And then, of course, coronavirus happened, and then you're looking at other economic factors, and they weren't going straight to digital currency. So, they won't. You just talked about how few bank branches will be around when they do this, and then on top of that, they can't really have a bank run because with no paper currency, there's nothing to go run to. So what they're going to have for the intelligent people, they're just going to have a big spending spree. That's going to be the run on the banks. It's just going to be, we're going to empty the accounts, buy stuff. And that's not really a good option, is it?
No. Gold and silver are absolutely going to roar. Matter of fact, gold closing in on the highs of the day now, $1,850 and change. $20 gold, $2,100, 800-951-0592. Final segment coming up. 800-951-0592 as gold continuing the breakout. And, of course, Jason and I, we broke it down for you earlier in the year, as the calendar rolled over. If you take these gold markets over the last 21 years, only 3 times in the 21 years, and that's kind of incredible, where the gold's had down years. Every year after that, gold has always risen. And we're talking, big percentages by and large. And this last year, one of those down years in the gold markets, and we expected the first quarter to be a good quarter for gold. And obviously we're only 1 month into it, but today we're at new highs for the year here at 1,850. And Jason, I expect this to continue as once again, I think Wall Street's little stunt yesterday and the fear is going to unnerve Jay Powell, and I expect him to be very much in the I'm going to talk tough but not really that tough, and they're going to have their little dots and their little dots on the chart thing that say 3 rate hikes or 4 rate hikes. And I think you're going to see a really bullish reaction to that in the gold markets, in the oil markets, in the paper markets, the debt markets, all of these markets essentially. And again, I think we're setting ourselves up for a stagflationary environment.
Yeah, Joe, on the afternoon show after the markets are closed, I told the audience, this is, it's not necessarily a good thing when it drops, 1,070 points and then comes all the way back to 100 points up. That's volatility in a massive way. And that volatility, that scares some of these stock guys. These stock guys, Joe, I've heard them say it before, that the best hedge against inflation is the stock market. And then when things get shaky like they are now for these stock guys, they sell their risky stocks and they buy Apple. That's where their safe place is, Joe. But they don't get it. That's not as safe as they think.
Yeah, and this is the problem. And again, the earnings reports, the guidance, all of these things out there. Even the companies that have done really well with their price increases, their bottom lines, they're not making as much revenue as they thought because these prices keep creeping out of control, but I'm going to tell you right now. Jason's right. When you see the market doing what it did yesterday, and we've seen these examples, always, and I shouldn't say always, but in the 20 years I've been doing this, this is the type of action we see in the stock markets before crashes, right? These huge swings, and obviously January has not been a good month for Wall Street for good reasons. But I think the plan, it just revealed itself completely. And I knew we were going digital, but now I understand it a lot better. There's going to be major issues coming here very quickly. I hope you're positioned right. The banks are no longer going to be banks. This is it. This is the end of banking as we know it. The central bank digital currency, and now the ability to go negative and not affect the loan markets. Man, right? Remember, sometimes you can get a loan in Europe with negative interest rates. That's never coming here, and digital money makes sure it won't. $20 gold, 2100 800 951 0592.